my view, and I think the total addressable market's still notably higher than it is now. I don't know what it's going to do over the next 3 months, but yeah, I'm bullish with say a 2-year view or a 5-year view or potentially a 10-year view. I went through a long phase where I was pretty skeptical on the asset. I was like, well, what if another currency is going to be better, or what if the whole space gets so diluted? But once I saw the network effects really form, once I delved into the technology and why it's designed a certain way, ever since really early 2020, I've been pretty structurally bullish on it, and that really continues to be the case. Over 4 years later.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. Bitcoin is still in the midst of its bullish trend, and the upcoming 18 months appear to be highly promising. In a recent interview, Lyn Alden, a well-respected macro analyst, predicts that the price of Bitcoin will reach a minimum of $100,000 by the end of 2025. Alden highlights the increasing number of individuals seeking a safe haven asset like Bitcoin, indicating that its prices are poised to surge even higher. Alden highlights that Bitcoin is on the verge of a significant surge due to two fundamental factors. Firstly, there has been a significant increase in demand, with approximately 9,000 to 10,000 Bitcoin being purchased daily since the approval of the Bitcoin ETFs. This surge in demand has created a shock in the market. Additionally, the upcoming 2024 Bitcoin event has further impacted the market. With the supply of Bitcoin being reduced from 900 new Bitcoin per day to just 450, there is a significant shortage. Only 450 Bitcoin are being created daily, while the demand for Bitcoin ranges from 9,000 to 10,000. This creates a massive demand-supply imbalance, with 20 to 30 times more demand than supply. As a result, the price of Bitcoin is expected to skyrocket in order to establish a new equilibrium. And lots of things Lyn Alden discusses, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
Sure. So one of the attributes of money, it's that which you hold, even if you don't intend to consume it yourself. That's kind of historically where money kind of came from. And so, for example, if we hold a gold coin, we're not necessarily intending to melt it down into jewelry or industrial use anytime soon, but we're kind of holding it knowing that it's a useful thing that other people use.
Store of value.
Store of value. And as an American, to your point, we generally don't find ourselves troubled for payments or even troubled for savings. We have no shortage of savings vehicles that are reliable. But if you kind of view it as something that could be useful for billions of people around the world, something like half the world lives under shades of authoritarianism, half the world lives under kind of persistent double-digit inflation and multiple, hyperinflations within our lifetime. Bitcoin is something that Americans often treat more as an investment, and it's one that happens to have outperformed the S&P 500, the NASDAQ, almost everything other than NVIDIA over 3, 5, 10-year period. So for us in America and Europe, it's often seen as an investment, which I think makes sense. But in, say, Africa, where there's roughly 40 currencies, or Latin America, where there's roughly 30 currencies, and every one of those currency borders is a friction, most of those currencies are undesirable to hold, is something that's useful to them, and that therefore it is an investment for people that kind of understand that there is a use case, even if the use case doesn't apply to them. And like America, I do think that we are running this more structurally high inflation because of the things we talked about earlier in this discussion. But that doesn't mean they have to happen super quickly. It doesn't mean that things have to end. If you kind of do the rough math, I mean, Congressional Budget Office expects 20 trillion in net treasuries to be issued over the next 10 years. They also assume no recessions. So if there's recessions, that number is probably going to be higher. They generally undershoot the numbers. But let's say conservatively, 20 trillion in treasuries are going to be issued. If you look at how much, gold's going to be mined over the next 10 years, at current prices, it's somewhere in the ballpark of 2.5 trillion. And the amount of Bitcoin that's going to be created at current prices is something like 70 billion. Now, of course, gold and Bitcoin can change in price to accommodate more inflows if people want to put more money into them. But the point is basically, if you're just kind of saying, what do I want to own that's pretty scarce? Obviously, good equities are one of the options. Good real estate can be one of the options. Art is historically one of the options, especially for wealthy investors, but also Bitcoin is because it's liquid, it's fungible, it's portable, and it's got a lower kind of new supply growth rate than a number of other kind of liquid investments. So I think from an American perspective, it's often viewed as an investment, whereas in other countries it could be viewed as a lifeline.
As the crypto community eagerly anticipates the upcoming golden bull run that is expected to occur after the Bitcoin halving event, experts in the field attempt to establish projected price ranges for Bitcoin during this current bull cycle. Specifically, they have gathered to suggest that the peak of this cycle for Bitcoin, BTC, could fall between $200,000 and $500,000. It is important to note that these projections are optimistic in nature, and the analysts emphasize that they are not making definitive predictions or offering financial advice. Rather, they are simply expressing an observed expectation based on patterns from previous cycles. Examining patterns and presenting their findings, the analysts studied the price movements of Bitcoin. By analyzing past Bitcoin halving events specifically, the observed data consists of the price of Bitcoin at 1, 3, 6, 9, 12, and 18 months. Upon analyzing this data, it is evident that during the first 3 months, the market carefully examines the situation. Between 6 to 18 months after the Bitcoin halving event, there are significant price increases happening in a parabolic manner. This trend is evident from the data collected from the first to the third, having the Bitcoin price experiences significant increases after each cycle. Initially, it multiplied by 45, then by 28, and finally by almost 8. These returns are quite impressive for Bitcoin in a relatively short period of time. It is intriguing to observe this trend given the current phase of the Bitcoin market. It is reasonable to anticipate a significant increase in price. One significant factor contributing to this is the historical support for Bitcoin ETFs. Looking at the average returns in the last 2 cycles, the expected pump this season could be exponential. If Bitcoin were to reach that level of appreciation, it would be a remarkable achievement. This would make the crypto market very intriguing, as it would elevate Bitcoin BTC beyond the traditional gold markets. Let's get back to Lyn Alden interview.
Yeah, so basically the rule set of Bitcoin is distributed among the people that run nodes. It's open source software, and so it's built into the code since inception. So every approximately 4 years, the amount of new Bitcoin that's generated every 10 minutes gets cut in half. So it's not that mining just one day shuts off. It's that mining starts out at a certain pace, and over time it asymptotically approaches 21 million. So back in April, the amount of new Bitcoin created every 10 minutes got cut in half, and approximately 4 years from now it'll happen again. And at this point, as of this latest halving, the annual supply inflation of Bitcoin dropped below 1%. Which is approximately half that of gold. Gold generally historically grows at estimates of something like 1.5% to 2% per year in terms of supply. The typical developed market currency grows at 6 to 9% per year outside of extraordinary years. Emerging markets like developing countries, they typically grow at double-digit currency supply growth over the long term. And so among fairly liquid monies or money-like assets, Bitcoin is now a very slow-growing supply. That's how I view it. I think the total addressable market's still notably higher than it is now. I don't know what it's going to do over the next 3 months, but yeah, I'm bullish with say a 2-year view or a 5-year view or potentially a 10-year view. I went through a long phase where I was pretty skeptical on the asset. I was like, well, what if another currency is going to be better, or what if the whole space gets so diluted? But once I saw the network effects really form, once I delved into the technology and why it's designed a certain way, ever since really early 2020, I've been pretty structurally bullish on it, and that really continues to be the case. Over 4 years later. I think so, but the main challenge there is that, and this is kind of unique to the U.S. Our tax receipts are very tied to asset prices. It's kind of just, especially since the 90s. because a large
Oh,
portion
okay,
of
yeah.
taxes are from wealthy individuals.
So people exercising their NVIDIA options.
Exactly. Yeah. And so you'll
Right,
generally
yeah.
see with a short lag, tax receipts follow asset prices. So if we were to pivot toward austerity, there's a decent chance we would get kind of flattish asset prices. And then therefore you could ironically continue to widen the deficit anyway. It's a very hard tailspin to get out of. You'd have to, I think, not just tweak your revenue and spending model, but you'd have to kind of overhaul some of the ways it works, which would make it even harder to do in a very polarized environment. Um, Generally speaking, when countries get out of this, like we got to similar debt levels in the 40s, we had much better demographics back then. We had a much stronger manufacturing base. But basically, what countries do when they find themselves here is they generally run financial repression, which is that they hold rates below the inflation rate. It kind of slows down the interest expense of the public ledger, and therefore can kind of slow down the money supply growth. It makes your currency fairly undesirable to outside entities, which is not what we're doing right now. That's what Japan's doing, but I think that's kind of in the cards for the U.S., which is basically that we're going to have a period of time where interest rates are just not really keeping up with inflation. If you're holding currency or bonds, you get kind of gradually devalued. Um, Technology and part of what disguises the inflation is that we think of inflation as being compared to zero, but the baseline inflation rate is negative because over time technology gets better, things get cheaper to produce, but they go up in price anyway because of how we run our money. And so any sort of technological gain is also contributes to the possibility of soft landing because as you get better at making stuff, if you're running money supply growth at 10%, but you're 5% more productive at making things every year, then actual prices on average might only be going up at 5% per year. That's kind of historically how countries try to grow out of this type of situation, but normally they don't do so without a pretty big currency devaluation along the way. And that generally shows up in whatever's scarce. So generally the high quality assets go up a lot in currency in those environments. If you get any sort of dislocation in energy production for a period of time, like if you're just not growing or capex is not happening and you get a currency devaluation, that can show up in higher prices. That's generally what triggers pain in emerging markets is some of their key imports get very expensive. There are ways to kind of smooth it out over a long period of time, but it's very hard to kind of structurally fix it until there's basically a big change in how taxes are done, spending's done, and probably the overall currency level as we kind of know it now.
There's Lyn Alden sharing her optimistic views on Bitcoin and its potential to revolutionize traditional finance. As she provides us with insights into the current state of the macro cycle, she highlights the need for a revamp in traditional monetary systems. She points out that over the past 40 years, debt has been increasing while interest rates have been decreasing, and now we find ourselves at a point where interest rates are at zero. Lyn emphasizes the urgency of the current situation, where fiscal matters are increasingly affecting the majority. This highlights the necessity for a newer and improved monetary system to bring about the necessary change. Ultimately, the attributes of Bitcoin, such as decentralization, transparency, security, and inclusivity, position it as a potential savior for the financial system. It offers solutions to long-standing issues and paves the way for a more equitable and resilient financial future. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.